High inflation, what to expect and reactive strategies. Hi, everyone. In this video, I'm going to talk about high inflation and what to expect from it. I'll also share some reactive strategies that you can use to protect your finances. If you are worried about inflation, then this video is for you. The inflation rate measures the cost of goods and services across the country annually. It measures the change in price for a basket of everyday items such as housing, food, gas, and education. What is the current inflation rate? The inflation rate rose to 8.26% this month compared to 5.25% last year, well above the Federal Reserve's goal of 3.26%. What is the cause of high inflation? There have been various elements that have contributed to this. There has also been a rise in labor costs due to the tightening job market and minimum wage increases in many states. Finally, the recent trade tariffs are expected to drive up consumer prices. The tariffs are expected to lead to higher input costs for companies and could impact their ability to produce their products at an affordable cost. How does high inflation impact consumers and investors? Consumers may be less likely to purchase if they think the price will be higher. Investors may be less likely to take risks with their investments and opt for more safe, short-term vehicles such as treasury notes. Inflation can also be cyclical, as rising costs can lead to less economic demand. Investing advice for high inflation. The best way for investors to safeguard themselves against inflation is to invest in assets expected to rise in value as inflation rises. Some investments can be impacted by inflation, such as treasury notes. Investors should diversify their portfolios to protect themselves against rising inflation. Conclusion. The inflation rate has been steadily rising for the past few years. As a result, investors can protect themselves against inflation by investing in assets expected to rise in value as inflation rises. I spent hours making this video and I would appreciate it if you could subscribe and share it. Learn more.